appreciate all of you guys watching the show and the channel. With Angelo Christian, we do our live show every Thursday. Talk with Angelo. You can tune in and ask questions. We talk about deals, funding, real estate, and the whole nine yards. Uh, we're direct nationwide. We do commercial, residential, hard money, private lending. We're doing it for over 2 decades. Serving America. We do all different types of programs: FHA, VA, conventional, jumbo, hard money, no doc, construction loans, CMBS loans, fix and flip bridge, all different types of financing packages. So if we can help with anything, definitely let us know. We want to be here as your lending source, your hub for finance. That's our expertise and what we specialize in. And if you guys have any questions, this is a chance to ask questions down below. If you want to know anything about, loan products, guidelines, requirements, I'm going to be talking about a few things tonight, but it's definitely a chance to do a Q&A. If you have any questions and things that you want to go over and discuss, please let us know. And yeah, please don't forget to subscribe, like the bell, share it, enable notifications, whatever you can do to help us grow, get the information out there, the content. We've been, actively lending for nearly 2 decades. We've had the YouTube and social media channel for going on 7 years now. So, and we've made over 1,600 videos. So if we can help you guys with anything, please, don't hesitate. Ask questions. Let us know what we can do. So today we're talking about um, the requirements as far as when you're getting a loan. Some of the main requirements to know when you're applying for a loan, as far as debt ratio, credit score, reserves. These are really, really important things. And then also the things on your credit report, like if you have disputes, if you have collections, if you have charge offs. So, those are the topics I want to talk about tonight to be prepared, get in preparation to help you so you are successful when getting a loan. So, first thing is your debt to income ratio. You got to make sure that on the loan that you're getting, that you have the right debt to income ratio. If you're applying for a conventional loan and the maximum debt to income ratio is 43%, you got to make sure that your income to debt ratio is below that to qualify. So if you make $5,000 a month and the house payment is $2,000 a month, you also have to factor in all of your bills that you have, the stuff that's reported on your credit. That's what your debt to income ratio is, a combination of all of your debts that report on your credit, not like debts like cost of living or food or anything like that, but the debts that are actually reported on your car payments, credit cards, student loans. All that has to be added in on top of your mortgage payment. And for a conventional loan, it cannot exceed 43%. So your debt to income ratio has to be below that limit. So you don't want to apply for a loan and have your debt to income ratio be higher, and then you wouldn't qualify for the loan. Okay, that's the first thing. The second thing is you got to make sure that you meet the requirements for that loan. Every loan has some type of credit or asset requirement. If a loan has a certain credit score requirement, you have to make sure that your middle credit score meets that requirement. So if the loan requires a 500 credit score, you need to make sure that your middle credit score is at least 500. If it requires 6 months reserves, which reserves are the monthly mortgage payments that you have in your bank account. So you have to have, some programs require at least 6 months of reserves. Some require 3 months of reserves. So you have to make sure that you have that money in your account, or you have a plan to get that money. Because when you go to process your loan, they're going to be looking for that, and you have to have those funds in your account. Some programs require on your credit report, you have no accounts in dispute, you have no collections. So you have to look at your credit report um, and see what you have on there. Some accounts, like if you have them in dispute or they're in collection, they won't accept that. And some products are okay with that. So it just depends on the type of loan that you're doing. You have to make sure that you meet those requirements, because if you don't meet those requirements, then the loan's not going to get approved, and then you're not going to, get what you want. You're not going to get the property. You're not going to get funded. Now, some loans, they don't care about that. On our YouTube channel, we have videos on all the loan products that we offer, and you can see what the requirements are for all those different loan programs, and you can study those to see which one requires what for that program. And it's really important that you follow that, because you want to make sure that you're able to get approved for that loan. If you're looking for an FHA loan will go up to a 56% debt ratio. So you want to make sure that your debt to income ratio is below that. If you're trying to do a construction loan, you got to make sure that you meet the requirements for that construction loan. So these are really, really important things that you have to follow. So, but please take a look at that. And then, I think it's a really important thing for, whenever you're making sure that you're successful with getting the loan that you want. So that's what I want to talk about, is preparation is key for us. One of the things that's so cool about our company is when we help you, when we get started in the loan process, there are no fees to apply. There's no contract. You don't have to put any money up. There's no deposit. And we don't do a hard credit check. So it doesn't affect your points. We just do a soft credit check. So you can leave your approval open-ended, but we meet with you. We have a meeting, and we gather up all your information, your financial package, and then we discuss what's going to be the best program for you to help you to get approved for the loan. We go through all the different options. Okay, we look at FHA, VA, jumbo, hard money, no doc, USDA, and based on your situation, which one is going to be the best option for you. So we can go through the whole process and then see which one is going to actually work to help you the most to get you that pre-approval. So, and then from there, you'll get a pre-approval letter from us, and then you can take that to start shopping for your home. If you're trying to purchase a house, or if you're trying to build, you can buy land and do a one-time closed construction loan to build on your house, if that's something that you want to do. But meeting with a lender, talking to them, getting guidance, getting direction to help you, to show you how to get it done, is so important. I can't stress that enough, because you need to make sure that you're getting a good plan for getting your loan done. I think one of the most important things. Hey, Matt, what kind of loan can a person get? 36,000 annual income. Well, if you're buying a house to live in, you could probably. So we've, I don't know if you've seen any of my videos about this, where we talk about the rule of four, and there's a video that we produced. I think it's on the YouTube channel, the rule of four. So if you make, $36,000 a year, and you're buying a primary residence, then they have to check your income, the ability to repay. So that's 3,000 a month that you make. So you can qualify. You got to remember that you don't want your payment to be more than 40% of your income. Okay, so if you make $3,000 a month, multiply by 40, then the maximum house payment that you can have is $1,200 per month. So then you have to kind of reverse that and see, well, how much home is $1,200 per month. So for every 100,000, if the payment's $850 a month, then that means that theoretically you could probably qualify for approximately about $150,000 home. Somewhere in there, 140, 150,000. Now, if you buy a rental property, then your income doesn't matter. They don't look at your personal income. They look at the cash flow of the property. So it just depends on the type of transaction that you're doing. You buy a rental property, your personal income is not used. So that's a good question, though. The other thing that so we talked about preparation, key for success when getting a loan. Getting started, one of the things I highly recommend, I talk about this all the time, is make sure you're not doing a hard credit check when you get started. You can get by with just a soft credit check to help you to get you the pre-approval. There's no reason to spend money and do a hard inquiry to affect your score and your points when you can just do a soft credit check. We do a soft credit check on everyone. That's how we start the process. And the scores are the exact same with a soft check than a hard check. Now, talking about some programs that have come out that I think are very powerful and instrumental. So we have a new product that came out. You can buy up to a 4 unit apartment complex with only 5% down. It used to be 25% down, so now it's only 5% down, and you can get your closing costs included. So some of you guys that are out there that are looking to get mailbox money, get extra income, the apartment complex loan is really good. The maximum is 4 units. The minimum is obviously 1 unit, but you can go up to 4 units and only purchase with 5% down, and the other income that you get from the other units will be applied towards your income. So let's say that you buy a 4 unit and each unit gives $2,000 a month of rental income, and you live in one of the units. The other 3 units, you can get $6,000 a month rental income and collect that income to help you to qualify for the loan. So that's a very strong program because let's say you want to buy $1 million 4 unit apartment complex. Before you'd have to put 25% down. That's 250K. You don't have to do that anymore. You can do it with as little as just 5% down. So that's a really, really strong program. So that's a great product. We also have, I don't know if you guys have seen on our YouTube channel, on our website, we have our down payment assistance program. You can get up to $50,000 for down payment and closing cost assistance. So it's for FHA for your primary residence. You have to have at least a 620 credit score, but you could purchase a home, if you're in wherever, it's nationwide. It's the only state we don't offer that is in New York. So if you're in New York State, I'm sorry we don't have the down payment assistance program, but everywhere else we offer it. And you can, basically purchase the home with no money down. I think it's a solid program. A lot of people that I see, they don't have a problem making the monthly payment. Like they pay rent, no problem making the monthly rent payment. The challenge where they run into is coming up with all the cash to close, the closing costs, because you have down payment, you got closing costs, you got reserves, and these days people don't have a lot of money saved. It's really hard to save money when the cost of everything's gone up so much. So these down payment assistance programs are solid. They're to help you, so you can purchase the property with virtually no money down, so you can own your house. And that's why they're here. We have a lot of clients that they get down payment assistance, they get closing cost assistance, and they can buy the house with. I had a customer 2 weeks ago bought a house with only $16 to closing, and she was ecstatic. She didn't think it could be possible. Her bank told her in Arkansas she needed 20% down for a $360,000 home. Crazy. So, but those are the type of things that are out there that are available. A lot of people aren't aware of it. We also do FHA and VA loans down to a 500 credit score. This is another thing that is also very surprising to a lot of people. A lot of people think that for the FHA and VA that you have to have a 620 credit score. It's not true. You can actually go down to a 500 credit score. The VA and the FHA have no credit score requirement. They leave it up to the lender to decide what credit score they want to use. So we can actually go down to a 500 credit score with the VA and the FHA. Now, the one thing, the VA is obviously 100% financing, but FHA, if it's 580 and below, you do have to put 10% down. There is not any zero down payment assistance if your score is below 580 with FHA. For the down payment assistance program with FHA, you have to have at least a 620 or higher credit score. So that's one thing to keep in mind. Another product I think is also very strong right now that we're seeing in the future what's happening is that we're projecting that rates are going to somewhat go down this year. They've somewhat leveled off, but if rates go lower, we have our no documentation, our private loans for self-employed. We are considered the self-employed expert of the market. So we have all different types of programs for self-employed. We have the bank statement loan, the P&L loan, the 1099 loan, the no doc loan, the private loan. So all these programs that you can purchase a home or rental property up to $10 million. And you don't need tax returns, you don't need W-2s, you don't need pay stubs. You can get a great rate 30-year fixed. So it's an awesome program for you guys out there that are self-employed. You own your own business. You have expenses, you got overhead, you got employees, you got contractors. But you want to buy a property, you can do it. You can do a purchase with it. You can do a refinance. You can do a cash out. You can do an investment property. You can close in your LLC. So you got a lot of different options that we can do to help you with the funding. So the whole thing with us is that we want to be, your lending source, your hub for finance. So whatever you need, reach out to us. We're here for you. We've worked really hard to become, the one-stop shop for lending. There's not really any other mortgage companies that I know that offer commercial, residential, and private lending all under one umbrella. You know, most companies you have to go, if you want a commercial loan, you go to a commercial lender. If you want a private loan, you have to go to a private lender. You want a conventional loan, you have to go to a conventional lender. But we've worked very hard to create an environment, an ecosystem to be able to offer all these products to you to help you guys to get the funding. Maybe you want to build an apartment complex. You want to buy an office building, and you want to buy your dream home, and you want to buy a rental property. We have financing for all those programs to help you guys out. So definitely don't be a stranger. Reach out to us if we can help you with any type of loans. We're open 7 days a week. You can call or text our office 832-431-6331. You can call or text us there, or go to our website, official Angelo Christian, or our Instagram or YouTube, Angelo Christian. Oh, hey Kim, nice to hear from you. Hope you're doing well tonight. Appreciate you for reaching out. So we have all these programs out there to help you to get it done. So it's just a matter of you putting forth the effort, you know, um, to, and that's the one thing that it's important to understand, that we're here as your lender to help you, but it does require your participation, effort from you to get the paperwork in, to follow through, work with us to get the things that we need in to get it closed. You have to produce documentation, you have to produce information, and we need to get that from you to move forward with the loan. That's part of that's one of the key things here. You got to get us what we need so we can figure out a deal on how to get it done for you. It's so important. I can't stress that enough. That when your lender asks you for something, get it over to them. Do your best to help supply the documentation that's needed so you can close. We can't close without your help and your participation. So that's a very important thing. So that's kind of the summary of what I wanted to talk about this week and kind of go over everything with you guys. So we talked about market and interest rates, private no documentation loans, the down payment assistance program. We talked about, what's needed. Preparation is key for success when getting a loan, the requirements for loans, which are very important. So Appreciate all of you guys watching the show. Like I said, don't forget to subscribe, like us, give us a thumbs up. Share this with anyone that needs information, that wants content about learning about real estate, learning about finance, so that way you guys are empowered. You have the information, the knowledge to be successful. We're here for you to help you to get it done. So we do our show every Thursday. You can also check out all our stuff on Instagram, TikTok, Facebook, YouTube, obviously. Reach out to us. Don't be a stranger. Let us work on it to help you to make it happen. Call or text me anytime. 832-431-6331. Appreciate all of you guys watching the show and the channel this week. We'll be back again next week. If you have any questions, send us an email or a text. Thank you all so much. Take care. Have a great weekend. We'll see y'all again next week. Bye-bye. Oh, hey, Justice. Question. Client owns single family with mortgage in different name. Can client get equity out? Say that. Can you mind? So you're saying that he is on the title of the property, but somebody else is on the mortgage. Is that what you're saying? It's possible, but it depends on the type of loan that we're doing. Okay. Um, it's possible, but see, like, it depends on many things, whether it's a primary residence or an investment property or commercial property, or if it's hard money. Um, so there's many factors that go into that, and the short answer is yes, but it depends on the type of loan that we're doing. Some loans are okay with that, and some loans are going to require that the original person that's on the mortgage um, will have to go on it. Oh, it's a primary. I'd have to know more about it to see. Um, I'd have to. It is possible, but I'd have to know a little bit more about it to figure it out. I don't know if you can call or text us tomorrow to go over it, and then we can discuss it. Okay. Um, it is possible, but we gotta dive into it a little bit further. Those are those type of situations. They're and the reason why is that there's many variables that are involved, and without me having all the information, I can't tell you for sure until we assess it. Because there are some programs that are okay with that, and some aren't. If they're deceased, and there's some type of heirship to the heirs, that should be fine. Um, and we can document that. Maybe there was a will that went to that person. So, oh, you're welcome, man. Thank you for reaching out and all your support. We appreciate that. So, we'll be back again next week. And if you guys have any questions or comments, don't be a stranger. Reach out to us. We're here for you to help you, to get it done. So, please reach out, call or text my office, 832-431. Okay, cool, cool. Yeah, let's talk tomorrow, Justice. We can figure it out to see what we can do to help. I want to see what we can do. So appreciate all of you guys tuning in tonight. Thank you all so much. Take care. Have a good evening, guys. We'll see y'all next week. Bye bye.